All right. Hello, everyone. I hope everyone is doing all right. I hope everyone is having an amazing day. This is the first actual analysis video. If you haven't watched the intro video yet, then please do so. That goes for the intro videos in general, but also the higher time frame analyst intro video. And you'll see it. It's called 1 point intro. So if you haven't watched that, then please do watch that first. Otherwise, if you're taking them out of order, they don't really make sense, and they don't quite feel the same. It's not as useful. They don't make a lot of sense if they are not in the right order. All right. So yesterday we talked about the intro stuff, the Notion stuff, the steps stuff, and today we are going to talk about analysis and actually do an analysis and show you my routine, etc. Now, if we go to the Notion right here, this one, you'll see market structure, order flow, candle science, a routine, journal exercise, like we went through yesterday. Now, for this analysis, for the higher time frame analysis, I want you to mainly pay attention to market structure, order flow, candle science, as well as I've explained yesterday, and like I will explain today, obviously. Mainly focus on these things. Now, I also gave you a routine, but we won't be going over this routine in full detail right here. Why not? Why did you give us a routine and aren't going over it? Well, I want you to copy this routine, and then afterwards, I want you, based on my analysis, I want you to remove all things that you think aren't necessary. And you'll see how many things you can remove. And this is very important to do. So don't take this lightly, because this is very important to do, because with execution and mainly with my trading model, you'll see how easy it is and how much things I have removed in order to get to this stage where I am today. So again, a lot of things here are fancy words, but they are not necessary, and they will likely only confuse you if you do use them. So you might recognize this, and you might use it yourself. If you do use it, great. But things like, I'll give you one hint, things like commercial hedging, well, cool, very fancy concept, but is it that useful? No. At least not for me. So let's put it that way. My personal preference is just look at a chart and get everything from the chart. Get all the information from the chart, and that's when I perform the best. I used to do all this analysis. So if you do start with a long list of analysis, it's not necessarily bad, because slowly, with time, with experience, you will filter it down, and you will look at things you don't want to use, look at things you do want to use. So if you do have a pre-market routine you're not satisfied with fully right now, then just stick to it. And eventually you will, with time and experience, you remove things automatically. Now, does this go on to say you need to completely change the core of your pre-market routine? No, never change the core of anything. The core is the same, but just make it easier, make it more simplified. So, for example, we will remove a lot of things from this analysis. At least that's what I did. And once I did that, it became more simple, but it became more effective, because it was so simple and I mastered like 2 or 3 things. These things I mastered. I knew exactly what I wanted to see, etc. And that's all I needed. So let's dive right into it. Now, I have my own routine right here. The monthly analysis, seasonal tendencies, this is the exact same thing. This is my own journal. This is the exact same journal as in the trading dashboard you are provided with, so don't worry. Now, if we take a look at the seasonal tendency first. Now, this might seem like a lot right now, But again, I don't actually go over the steps. I don't go over the steps individually a lot of the time. So I just have my own routine in my mind that I use, and then the steps are involved in those steps in my mind, if that makes sense. And I generally just use this monthly bias defined. That's the only thing I really use. All right. Let's dive right into it. So the first thing was seasonal tendencies. Now I have a website right here. This is Equity Clock. So just this, if you type this, equityclock.com, you'll get to this. You'll see charts, seasonality at the top right here. If you click on charts, you'll just get a list with charts, etc. Very easy to follow. And this is something I like to take a look at. And I don't base my analysis off of the seasonality charts, seasonal tendencies, etc. Because I feel like this is almost like an easy way out. And why do I say that? Because if you just look at the seasonal tendencies and think, all right, let's take a look. Which month are we? April. All right, yeah, treasury bonds going lower. No worries, treasury bonds going lower. All done. So we'll look for lower prices. And this is obviously not true. So yes, seasonal tendencies is at the first one here, but it's the last thing I base my analysis off. So if everything on price action agrees and seasonal tendency then agrees with that, then I'll say, all right, nice. That's just an extra confidence. It gives me a bit more confidence. So if we do take a look right here, April, a little bit of a consolidation. May, we could see a move higher. Again, nothing confirmed. April, move lower, and then May, move higher. We are at the end of April right now, 23rd. All right, so possibly a drop off to then a reversal. Again, nothing set in stone. All right, so if we know that, then let's move on to our analysis. Let's move on to our quarterly shifts, interest rate differentials. And again, I'm not going to go into detail here because if I feel if I do go into detail right here, I will confuse the absolute shit out of you, most likely, and you will not pick up on anything, and you will be left with more questions than you had before. So that's not the thing I want to do, because the philosophy of this group is to keep everything simple, etc., and that you don't need a lot actually. So it wouldn't make sense if I went through the complete routine right here and explained everything. That wouldn't make sense. All right, so again, pay attention to market structure, order flow, candle signs. So let's dive right into it. Let's just do an analysis and follow me. And this is purely from my brain right now. I haven't done any analysis beforehand. Obviously, last month I've done analysis, but let's just do a top-down analysis, monthly, weekly, daily, 4 hour today. So monthly, I only, and this is the first thing for you to note, I only focus on nearby price action, and that goes for the monthly, and that even goes for the 1 minute. So whatever happened here is not that relevant to me. Obviously, order flow and seeing the things that are holding is relevant to me, but I like to focus on nearby price action right here. So just like we said yesterday, focusing on the next candle, focusing on the next monthly candle. All right, so if we know that, let's start with market structure right here. Intermediate term high. Why? Swing low to the left of it, swing low to the right, swing high to the left of it, swing high to the right of it. What is the intermediate term low it took out? Well, this one. Eventually, could we see some sort of retracement after taking this low? Yeah, we could. All right, we do get some retracement right here. Possibly even into this volume imbalance, which I do like. I would love to see a retracement into this volume imbalance. So that's already indicating that I want to see the next month hopefully push higher. So if the next month is pushing higher, where can it push higher from, etc., etc.? Well, there's nothing really clear we can see right here on the monthly if we do want to push higher. And if we do want to go lower, so order flow, then I would like to see it go lower off of this volume imbalance, potentially, and potentially even this order block. So that's your order flow. Your order flow is the premium arrays holding to one side, discount arrays holding to one side. And if we are expecting bearish prices, like here currently, order flow is still bearish. If we break this order block and we start to establish discount arrays and start to respect those discount arrays, then we are likely seeing bullish order flow. Now the difference with this and a lot of people's things. All right, yes, right here we take this a high, right? We are coming down. We have some kind of swing failure. We have an ST, like we talked about, an ST. This BISI is overlapping with this SIBI, aka the BPR, balanced price range. And we have this breaker right here. Now, this market structure shift and this move down isn't necessarily bearish order flow just yet. Yes, obviously, in hindsight, we went lower. But a lot of people struggle with the 2022 model because this happens and a lot of time it just continues higher. Why? Well, because order flow isn't established yet on the bearish side. So on the opposite side. So what we see here, we have this ST, this balanced price range. We respect this ST right here. How do we respect it? We have a new displacement lower right here. And that's your indication that the ST gets respected. And displacement is a fair value gap. So if I do say there's a displacement right here, there is a fair value gap. There is a fair value gap. Same as here, displacement, fair value gap. Sometimes I will refer to displacement as also a volume imbalance because I do tend to count volume imbalance as well as displacement. But for example, if this side had no fair value gap, only a volume imbalance, and this side did have bullish fair value gaps, then I would still see it as an ST. If there was only volume imbalances and no fair value gaps on this side, and no fair value gaps on this side, only volume imbalances, I would not see it as an ST. So I need fair value gaps on one side. Why? Well, I do like fair value gaps more than I like volume imbalances. As you saw in my, if you look at the enrollment 1 videos, we actually had a volume imbalance on a pair. I don't quite remember which one, which we were trading based off of. And all of a sudden, the volume imbalance was just gone in the recap video. And that's something that confused me and got me thinking, like, these volume imbalances, are they really there or are they just made up in a sense? Now, this is also dependent on what you trade. So CFDs and Forex will likely, the volume imbalance will be a little different. Futures, and this is a futures contract, so indices, ES, etc., volume balances will likely have more impact because it's real price action, it's real data. It's CME, it's the Chicago Trade Board, so they will have more impact. All right, we were busy with order flow. Order flow right here, this displacement lower. Now order flow is confirmed, especially here, new displacement lower, order flow is confirmed. Now, can you see how we are leaving this fair value gap behind right here? And the next month, previous month high sweep into the fair value gap, into the volume imbalance even, and then a continuation lower. This is exact where we want to be because we can see this coming. This monthly candle we can see coming very clearly. This monthly candle we can see coming. This monthly candle we can see coming. Now we have a new fair value gap. All right, we don't really close below. We have a little bit of consolidation. That's normal after big expansion. A little consolidation, new market sentiment, just like we're seeing on the dollar right now. A new fair value gap. We push higher. We respect the fair value gap. Next month, what happens here? See how this is fractal? previous month high sweep inside a fair value gap, same as this, just a little bit different. It's a fractal pattern, and we continue lower. This month is very predictable. This month is very predictable. This month is very predictable. Then we have this month. What happens on this month? Well, we push higher. What's the next thing price wants to reach for? This fair value gap right here. So this little space in between is very predictable price action to go higher. So this monthly candle, we knew, all right, it likes to want to expand higher right here. And this is how we focus on very nearby price action. And that's very important. So yeah, that's very important. Again, we don't have a clear sign on where it wants to go higher, potentially off of the monthly right here. But we do expect right here to push higher. We do expect the next month to push higher into this volume imbalance, into this order block, and then potentially drop off again if it disrespects this. So this is my invalidation level. If it disrespects the mean threshold right here, then I do think we are going higher. Potentially, let me take a look. Potentially even take out this trend line liquidity here, and potentially even this trend line liquidity here. There's nothing to rebalance. So if there's nothing to rebalance, a price will likely take liquidity. And again, if there is nothing to rebalance, then a price is seeking liquidity. So price is either rebalancing or seeking liquidity. If it isn't rebalancing, a fair value gap, etc., then it's likely seeking liquidity. All right, so this is my invalidation level. If we do close above this mean threshold, I would be bullish on the bonds potentially, and we could see higher prices. But again, that's like what? That's a few months into the future. That might even be in 2024. Who knows what happens by then? We'll just react accordingly. All we need to know now is this next candle, this next monthly candle. I would like to see an expansion up into this volume imbalance. That's all we need to know right now. All right, so if we do take a look at the yields, and you'll see it, you'll see me say it right here: monthly, weekly, daily, 4 hour. This is the exact routine I go through: monthly, weekly, daily, 4 hour. Everything needs to be in context of one another. So if we take it back, 4 hour, daily, weekly, monthly. 4 hours in context of daily, daily is in context of weekly, weekly is in context of the monthly. All right, the yields are very ugly right now. But again, we are respecting this fair value gap now. So we haven't done anything crazy yet. We are still respecting this monthly fair value gap. So again, if we do want to continue higher, where will we likely continue higher from? Well, this fair value gap. And again, for if you didn't notice, this is the yields. So US 30 yields. If the yields is going higher, bonds is going lower, and dollar is going higher. And if dollar is going higher, then indices, foreign currencies, etc., will go lower. All right, so if this wants to go higher, then I would expect a price to push higher right here, potentially take out this high. This is not, if you do study this, this is not that important, but if you study this, this is not generally how highs form. And again, this is market structure. Usually you'll see something like this, and then the real high sets in. This is not generally how real high forms. How can we know if this is a real high? If we have a displacement away, and if we are coming off of a real premium rate where it does want to continue lower. But currently, I would like to see these highs go, potentially these highs go, trendline liquidity all over the place right here. So higher prices is not that crazy right now. All right, then if we take a look at the dollar, we came off of this monthly fair value gap, came off of this monthly volume imbalance. And again, you can see how easy and pretty predictable this monthly candle was. And right now, what's happening, we are a little bit stagnating here, but what have we left behind? We have left behind this monthly order block. This monthly order block is already confirmed right now. This is already a monthly order block. Now, if we want to continue lower, where will we likely continue lower from? Order flow. This order block, this monthly order block. What's our invalidation level? Mean threshold right here. If we close above mean threshold, and this is not closing on a daily basis above that level. This is closing on a monthly basis above that level. Because obviously 4 hour will likely close above that level. If you're looking at an invalidation level, like mean threshold, 50% of an order block, or CE, 50% of a gap or anything, or a wick, then look at the time frame the gap or the order block is on, and that is the time frame you will also be looking for a body close or respect or disrespect. So that takes me back to candle science as well. If we close above right here on a monthly basis, so not on a daily basis, just on a monthly basis, if we close above, we are disrespecting this level, we are likely heading higher, heading to this high. But currently, that's all speculating. The only thing we can see, the only thing we notice right here is we are expecting lower prices here. Still expecting lower prices. Nothing more I can say about it. But that doesn't go on to say that on a daily we might expect a little bit of a deeper retracement first before going lower. Oh, and again, we can come into this breaker right here or anything, this mitigation block, and then continue higher. Even this fair value gap right here, this is nicely overlapping with these 3 candles. But again, that's so far in the future, that's not really relevant to us right now and not really necessary to know as well. So dollar, again, agrees with the current ID. It is contradicting with the yields, but the yields are consolidating, so I won't, if this happens, I wouldn't pay too much attention to the yields. I would just mainly go off of the bonds and off of the dollar. Dollar lower, bonds higher. Perfect. Then for ES, do I want to do ES currently? Let me think about it. No, let's dive into these ones first, into the weekly, daily 4 hour as well. Otherwise, I think it will be too long if we take all these pairs into consideration. Now, I do want to go over Bitcoin real quick because it's quite clean, actually. You can see how right here we have this breaker. We're pushing higher with this breaker. Sweep previous month low into this breaker, into this fair value gap, pushing higher. This candle is so easy predictable. And if this monthly candle is so easy predictable, that's a whole month. That's a whole month we can benefit off of that. A whole month we know the direction. That's insane. If we just look for longs right here, that's a whole month. We could potentially be done for the year within 1 month if we just get one monthly candle right. That's insane. And this candle is also easy predictable. See this? This candle also. This candle is likely also easy predictable because I do expect Bitcoin to push higher into this monthly fair value gap. So on the lower time frame, we could see some retracement into something again. All right. And as well, DAX, I've went over this as well, but see how easy and predictable this candle became. It's that simple, and that's a whole month worth of price action that you can easily trade because you know the monthly. And that's why it's so easy, right? Because all our work is done on the higher time frame, and because all our work is done on the higher time frame, and because we predict the next candle, basically, the monthly, weekly, we have so much time on our side, essentially. Like the monthly, we know the next monthly candle. Imagine the kind of entries we can take on the 4 hour and on the 5 minute. If we know the whole monthly candle, how many 5 minute candles are there in one monthly candle? That's a shit ton. Absolutely shit ton. And if we can just know the monthly, then we know the 5 minute essentially. We want to look for buys. Now we can maybe take short-term scalps to the for shorts, but mainly we want to look for buys because those will be the strongest, and those will generate a lot of profit because if you can hold them for a whole monthly candle on the 5 minute, if you break this down, monthly PDA, 4-hour entry for me, 4-hour PDA, 5 minute entry for me. If I've done this before, if I manage to get into a trade, and now this is not an everyday thing, this is where price is in such a high probability condition, that's when I do this. That's when this happens. If the 5 minute is perfectly in a spot on the 4-hour, the entry is just absolutely perfect. For example, let me show you right here. Monthly order block. 4-hour market structure shift. This 4-hour breaker is where you could have gotten a 5 minute entry right here. If you manage to position yourself, and let me just do it for the sake. If you manage to position yourself right here, where would my entry be? We have this ST is confirmed right here. It would have likely been something like this, covering this breaker block right here. If you manage to catch this entry, that's 12.5 R and still running within what? 24th, within approximately about a month. 12.5 R Dutch. That's insane returns. Now, will you hold this for full volume, etc.? No, but these will pay off eventually. If you take some profit here, 80%, leave the rest running, these will pay off massively. At the end, 15%. That's insane. That's insane gains. And that's why it's so important. The fractal plan allows you to make those insane gains where you don't need the 1M. Because a lot of people think 1M, smaller stop, more RR, more opportunities, more money. This is not essentially true. And that's the wrong mindset as well, because this can easily be done on the 5 minute and the higher time frame. You don't need that lower time frame. You don't need that 1 minute essentially. Now, if you do want to use it, then go ahead. Of course, use it. But again, if you're in it for the wrong reasons on the 1 minute time frame, then that's something to think about. All right, let's continue with this. Let's continue. All right, monthly bullish right here. So let's drop down into the weekly. All right, first thing I noticed, we are disrespecting this order block right here. This order block didn't have a fair value gap yet, so that's okay. Now, we have this breaker right here. And then we have the mean threshold of this breaker. So right now, I am going through everything. Order flow, candle signs, and market structure. So if we notice market structure first, which is the first step, intermediate term low, right? In the making. Because here, if we can get a new swing low with a new displacement away, a new fair value gap away, we have this new intermediate term low. This is our ST. Now, if we are going higher, where are we likely going higher from? Off of this breaker, these 3 up candles. Where's our invalidation level right here? The mean threshold of this breaker, 50% of this breaker. What does this overlap with? This fair value gap. All right, now, what could we likely see? Something like this. If we do come into the fair value gap, we might not even come into the fair value gap, but if we do come into the fair value gap, I want to see an immediate rejection away, and I want to see, I don't want to see a close below the mean threshold. Now, if it's a small close, again, we will react accordingly. and we will see what price does, because obviously it's not set in stone if it's a close above or below that it automatically invalidates the whole ID, but it is a general rule of thumb. Because if we have a small close below, that's and we still reject away, then obviously we are still bullish. So this is the ID. This and you see how easily predictable this has become. Now the thing gets interesting, because the monthly we were bullish, but the weekly has to be in context of the monthly. All right, the weekly hasn't reached that level yet. So what can it likely do? Well, maybe if the daily on the lower time frame has a higher time frame, a market structure shift to the upside, so bullish order flow is established on the daily, then we could already see higher prices. But that hasn't happened yet, I can already tell you, but because I remember from last week. But so next week's candle, voila. That's it. That's it. And we can catch this weekly candle on the 50-minute, on the whatever your trading plan is. And please, for this week, only focus on executing. Sorry, no. I said it wrong. For this week, don't focus on executing. Only focus on executing the higher time frame analysis. So if you are executing, etc., then just know we haven't gotten to execution actually yet. So I always advise wait for the execution review and then maybe start executing. And then as well, for the higher time frame analyst phase and for the execution phase, you encounter psychology problems. Not really, I don't like to call them problems. You're not a problem. It's just an obstacle we have to get over, and we will get over them. It's just an obstacle. So you will encounter psychology problems. Now, please write down these psychology obstacles, and we will touch on them in the psychology week, etc. Everything will be talked about, so don't worry. So that's important. Don't execute just now. Just look at the higher time frame. So if we are this week, we will be only looking at the 4-hour minimum. And if you do encounter psychology obstacles, then please write them down. All right, so next week, likely lower prices until we reach into this fair value gap. That's what I'm expecting. That's the most sensible thing to me, because the monthly is we are expecting higher prices. The weekly should be in context. All right, what can we go higher off of the weekly? The breaker right here, this fair value gap that's overlapping with it. All right, maybe even push higher right here. Now we do have this inversion, which again, if we do get a daily market structure shift from it, then we could see higher prices. Inversion sounds cool. It's just an old fair value gap that's basically overtaken. So it's now resistance turned into support. How long can we use these inversion levels? Use your IPTA data ranges. Weekly and daily inversion levels will be valid for around 60 days. Again, I personally don't like to use IPTA data ranges. They just make things confusing for me. And we already focus on nearby price action, so it's a bit irrelevant to me. And again, that's what we'll get into later on as well. Don't worry. So if we do get a daily market structure shift somewhere around here, then a daily market structure shift bullish, then we will expecting higher prices, and that's where the confidence comes in, because then the monthly agrees with everything. Now, if we do take a look at the daily, all right, we have these equal lows. We are respecting this inversion level right here. Now we are coming into this fair value gap right here, and we are respecting it. Now, the next day for me is, and this is Monday, so that's a bit unfortunate, but because we are respecting this, the next day is pretty predictable. So Friday for me is a pretty predictable day if we are respecting this, because how are we respecting it? Well, the body is closing below it, or the body is closing below CE, etc. So we are respecting this fair value gap. Overlapping with this now a breaker. This is now a breaker. So if we are continuing lower, again, it's the same thing. It's a fractal thing. If we are continuing lower, let me put this right here. Then I would want to see this fair value gap initially like to hold. So if we get a new displacement away from here, then I wouldn't want to see another move up into this fair value gap. So if we get a new fair value gap to the downside here, then there's no reason for price to come back above this high. Especially when we do come into this fair value gap and we have something like this and we come above this high, then we will likely go higher. Now, by saying that, if we don't have a displacement right here, we could sting into this fair value gap overlapping with the mean threshold. Now, our invalidation level for us, if we do want to go lower, I want to see this mean threshold get respected. So a body close above that mean threshold would almost invalidate ID. But again, then we will react and see how price and what price is doing, because that's very important. We can't just set in stone if this happens, then it invalidates it, because if it's a small close above it and it still rejects away, then we still have to react and we will still be looking for shorts essentially. All right, but again, if we focus on the next candle, well, if it's respecting this fair value gap, next candle will be a down candle. And that agrees with the weekly, that agrees with the monthly ID, because monthly ID right now is coming lower a bit and then pushing higher. Essentially, monthly ID is pushing higher. So if we do want to see lower prices into this fair value gap, etc., then we would want the next candle, so Monday, Tuesday, or whatever, displays lower into this fair value gap. So, and then afterwards, but again, that's not that relevant right now. We just focus on the next candle. Afterwards, we could get a daily market structure shift from here. But again, that's something we will see eventually. It's not that relevant right now. The next candle is what we focus on. So the next candle is potentially a down candle, because we are respecting here previous day high sweep. Next candle could aim for these swing lows. So let's just keep that in mind. Let's remove some things from the chart as well, just to keep things clean. Let me put the MT here. MT. And then we do have an idea that we talked about that. A little bit higher, was it? I don't know. It's fine right there. All right. This is the breaker. This is the weekly. All right. Perfect. So let's just write it down as well. Monthly bullish, weekly bearish. So next weekly candle, we are expecting a bearish candle. Daily is bearish. So next daily candle, we are expecting a bearish candle as well. Next monthly candle, we are expecting a bullish candle. Now, obviously, will we be correct 100% of the time? No. So again, these are not signals. These are to get you to an independent trader, etc., and to get you thinking like an independent trader. These are not signals. So don't execute on them. And that's exactly why I'm telling you, you need your own model, etc. That's when it will make sense. So if you feel a bit of FOMO, then write that down, because that's a psychology obstacle, and that's because you feel like you're executing. And if you do feel FOMO, then just know there will always be an opportunity. Again, that's very easily said. So we'll get into psychology. Don't worry, we'll get into it, and we'll get into executing as well. We'll get into how you can form your trading model, how you can form your unique model, and one that suits you. So don't feel like executing right now. And I could be very wrong on these, but I'm working with what I see right now. It's worked in the past. So I'm working essentially with probabilities. And this is the highest probability that can happen, that it goes lower right now into this fair value gap and then continues higher on the monthly. That's the highest probability that can happen, because it happened in the past. And there is no predicting really, because it could very well go higher right here, but the probabilities are just not in our favor right now. The probabilities are still to go lower, and that's important for you to understand. It's the bullish versus the bearish arguments. And that's exactly what's in the routine as well. It's the bullish versus the bearish arguments. Which one are winning? Currently on the daily, the bearish arguments are winning. All right, let's go into the 4 hour. This is how long have I been recording? I think quite a while. I don't want to make this too long because then it will be time inefficient and not efficient. 4 hour, currently nothing clear for me on the 4 hour. So again, 4 hours not clear for me. So daily would be clear for me. Just daily candle lower. 4 hour likely lower. Aiming for these lows. That's what I would be expecting. All right. Then we didn't do the weekly. No, we didn't do the weekly yet. We were expecting lower prices based off of the monthly, this order block right here. Let's just write that down as well. Monthly lower than weekly, daily. Let me write the 4 hour as well right here. 4 hour bearish. I wrote lower here. Monthly bearish. Let's just use the same terms. Monthly bearish, weekly, daily, 4 hour. 4 hour. All right. Perfect. Then let's dive into the weekly. Let's just put the let's put the mean threshold line right here just to make things clean a bit and not that messy. Yeah, we can keep this right here. All right. Weekly. Well, if we do want to continue lower, based off of the monthly, where will we likely continue lower from? Well, price has nothing to rebalance here currently. We have this low, this open of the order block we did come into. So that's something to take a look at. But we do have this fair value gap, which we could reach into and then potentially continue lower if we do respect the mean threshold. So if we do reject away from the mean threshold on the monthly. Now, there's nothing really to rebalance here, so it could be seeking liquidity above these highs because obviously on the lower time frame, on the daily, etc., these are just liquidity pools. So we do have this breaker block right here. So that's our or I like to call first line of defense. That's also order flow. If we are going lower, where are we likely going lower from? Well, this breaker block right here. This is as well the 50%, or no, sorry. This right here is the mean threshold, the 50% of the breaker. So again, it's a little bit iffy right now on the dollar, but if we do take the bonds into account, bonds going lower currently, dollar could be going higher. Or it could be held into consolidation. So dollar could be held inside a consolidation until the bonds reach this fair value gap and then push higher. Once the bonds are pushing higher right here, then we could see the dollar just drop off. Because dollar is right now too to go higher. So because it's too weak to go higher, if the bonds are going higher eventually, then the dollar could be going lower because it's very strong to the downside currently. All right. Then let's drop into the daily weekly. Nothing really clear again. Are expecting lower prices right here off this breaker. We could sting into this fair value gap. Nothing too clear right now. On the daily, again, this is what we talked about as well. This mean threshold, if we do continue lower, where will we likely continue lower from? Again, order flow from this mean threshold, this order block, this mean threshold of the order block. So if we are continuing lower, we will likely continue lower right here, or have a sweep above these highs and then continue lower, have a previous week high sweep. We might get that. a previous week high sweep and then a continuation lower. Who knows? That's something we will react and adapt to. So again, we did, and this is what goes on to say, is not set in stone, the mean threshold, because it closed above here. But again, just because it had a small close above and we do see a rejection here, that's then we go into the 4 hour and go look at discount arrays. For example, we took this fair value gap and we looked, all right, if we do want to continue higher and we want to continue disrespecting mean threshold, we will want to see this fair value gap hold, etc. And that didn't happen. And then we went into a search and seek and destroy profile. So if we want to continue lower, we will continue lower here. Now we might have a previous week high sweep and then a continuation lower. We are currently still in this breaker inside this weekly breaker as well. So I'm still bearish on the dollar. Now on the short term, so on the near term, I just really can't predict the next daily or weekly candle currently, because there is nothing clear. As you can see, this is a big difference with the bonds. Bonds was very clean to me. The weekly, the daily, the 4 hour, there is nothing that tells me it's going higher right now, it's going lower right now. There's not an if you start your story on the monthly, it should be very smooth once you go down to the weekly, etc., daily. This story right now, currently, is not very smooth. And that's the difference between the bonds and the dollar. If you make up this story, your brain will just pick up on the next part, pick up on the next chapter inside the story very easily. It will automatically generate that next chapter of your story inside your analysis. If that doesn't happen and you have difficulty forming that story, then it's likely low probability conditions. And this is exactly, I did talk about this before as well. Dollar is currently in a low probability condition. This is very unfortunate, of course, because we are doing our high time frame analysis, etc. But it is what it is. And yeah, if it does want to agree with bonds and it is very volatile, it could come into this weekly fair value gap and then drop lower. That's something that could happen. But again, that's me predicting a lot of price action right here. And that's not what we want to do. We want to predict the next candle. Predicting the next candle currently with this consolidation is not doable for me. I just don't necessarily know what will happen. If we take out these lows, I just think we could reach into this fair value gap potentially. But again, there is a breaker holding up price. Now, seek and destroy condition, we went over it yesterday as well. We are stuck in this breaker and this breaker. We are generating liquidity at 50% of this range. And we need new market sentiment. Now, if we do want to continue lower, we will likely have a previous week high sweep and then a continuation lower. And again, I'm not, and this is the difficult part, because I'm not sure there's way more price action to support the idea on bonds going lower than there is on dollar going higher right now. There isn't much price action to support the idea going higher. We didn't even have displacement to the upside. On the daily, we didn't have an ST. We didn't have a market structure shift. So the only thing for me to tell you is look for sells right now. Look for shorts. The bearish arguments are stronger than the bullish arguments. But again, the bearish arguments are not that strong as well. Of course, on the monthly, weekly, they are pretty strong. But where we are moving lower right now is not that clear. So until that is not clear, we just can't have a clear view on the dollar right now. All right, but again, I am bearish on the dollar still, but the place where it will go lower, so the premium array, which it will use to go lower, that's not clear right now. And that's perfectly fine. We just have to wait. All right. And again, I don't like calling it a bottom. So I'm not calling a bottom right here for the dollar. And I'm not saying, yes, this is going higher. No, that's not what I do. And on the bonds, it's a difference because we already swept these highs. We already had an ST get respected here. Order flow is already bearish here. Order flow is again bearish here. So you have way more price action to deal with, and way more. This is not calling a top because order flow is already supporting the ID. All right, let's just dive into some indices, etc., off of the weekly, and let's see if we can just look at the weekly and predict weekly, daily, 4-hour, and let's just try to predict the next candle very quickly, because I feel like this Zoom has been going on for a while now, and if this Zoom is pretty long, then try to split it up. Try to watch a half first, and then later on in the day watch the other half. All right, indices weekly. Currently nothing clean. We do have this volume imbalance, so we could potentially see a previous week low sweep. But again, we are already rejecting away off of this volume imbalance. As you can see, this candle science, we are already rejecting away. For price to come all the way back to this previous week low now, since it's already rejecting away from this volume imbalance, is very, how do I say it? It's very unreasonable to do, because then it would need to come all the way back down here. All this, it needs to come all the way back down here and then sweep it and then continue higher. Now, if the close was lower, so the close was somewhere around here, close to the previous week low, it would be more reasonable because it's already close to the previous week low, etc. Because we already have a displacement here, essentially a rejection away, that's not very reasonable for us to expect the previous week low sweep. Of course, doesn't go on to say it could happen. This is just the step-by-step process I go through in my mind and making up that story. So the bullish arguments here are stronger right now, also based on the dollar, etc. Daily, oof, this is ugly. This is a lot of wicks, a lot of wicky price action. In this situation, I just wouldn't even bother to try to predict price here. Why? It's not that it's impossible. It's just, it's very ugly price action. So what I do like to do, I just think in my mind, let's remove all the wicks. So if we remove all the wicks, we have this order block right here, which is pretty clean. We are respecting this order block right here with the body perfectly. Sorry. If we close below mean threshold right here, then this would invalidate the ID. Then we would also close below the weekly volume imbalance most likely, so that would invalidate the ID. So right now, ES higher prices would be the thing for me. Low hanging fruit, because this is such ugly pricing, low hanging fruit is this volume imbalance. This volume imbalance, that's the low hanging fruit. And then on the 4-hour, yeah, this is very, very, very messy price action right now. All right, I would aim for this volume imbalance, this daily volume imbalance. That's what I would keep in mind. This daily volume imbalance is a low hanging fruit. And potentially higher prices, of course, but just as the first target, this volume imbalance. And if we are going higher, we are respecting this mean threshold and likely pushing higher from here, where we are currently. So the next few daily candles could be a move higher. The Monday could be a push higher. All right, let's look at Nasdaq as well. Again, I will give homework at the end of this Zoom, so do stick around for that. And it will contain a PDF file, etc., as well with the instructions, or not really instruction, but just a little step-by-step guide. Not coming into this volume imbalance as of yet. Weekly right here is not clear to me. We do have this order block right here. We do have this, which we are respecting, displacing away with a volume imbalance. If we do want to continue higher, it will likely continue higher off of this volume imbalance or something like that. Yeah, so something like this. So a sweep off of this swing low, coming here lower, and then continuing higher. That's something that could happen. Then we also create SMT with ES. So that's an indication that we are just a simple confluence that we are going higher most likely. All right, perfect. So this could happen. Oh, a sweep into this low and then a continuation higher. Dow, sorry, 4 hour as well. So 4 hour, if it does want to continue lower, it will likely respect this mean threshold of this order block right here and continue lower right here. And then do something like this. So next 4 hour candle, I would be bearish. Next daily candle, I would be bearish. But if we do reach this, I would be bullish instantly. Of course, with the right confluence, etc. Weekly, this candle right here, this is a breaker, reclaimed order block, etc., whatever you want to call it, overlapping with this volume imbalance right here. So if we do want to continue higher, where will we likely continue higher from? This volume imbalance, this breaker, and then continue higher right there. Now also what I mentioned was PDA to PDA. So if we're moving from PDA to PDA, discount array to premium array to discount array. Constantly, we are moving from discount array to premium array to discount array. So if we are moving from discount array to premium array on the daily, we are moving off of this order block on ES to this volume imbalance. So discount array, premium array. And it's constantly it. Volume imbalance, discount array, potentially premium array, this old high, potentially volume imbalance. So constantly and within the context of the next candle, etc. All right, so yeah, Dow as well, higher right here. Overlapping is this, or nested inside this breaker is this order block. So we could see a swing low get swept here, and then this order block getting respected. Now again, this lines up perfectly with everything. Mean threshold lines up perfectly with the rest. So if we do want to continue higher, I would not want to see mean threshold of this order block get disrespected. So something like this would be reasonable. Again, that creates SMT, etc. Perfect. DAX. Once we close, we have this volume imbalance. We have this old high as well, this breaker currently. We could see some retracement into the volume imbalance or into the highs right here. But again, we are clearly bullish, so not trying to call a top and not trying to call a retracement. If we, sorry, if we do continue higher right here, which it does seem like it will do, continue higher right here, we have this new order block created, especially if we do get a fair value gap right now, we could see something like this. So next daily candle would be bullish for me. Next weekly candle would also be bullish for me. 4 hour, we are creating this fair value gap right here. Did I go into the 4 hour and the, yeah, ugly. Don't even bother. All right, so this is clean 4 hour because now we have an ST, we have everything, we have a BPR, whatever you want to call it. We are creating a new fair value gap. Once we open, we could see a sting into the fair value gap and then a continuation higher. So that's something to take into account, something like this. All right. Euro GBP. Again, we don't trade Euro GBP. We only use Euro GBP to see which one is stronger. So if it's going down, Euro is obviously weaker. If it's going up, Euro is stronger. If it's going up, you want to trade EU most likely. And if it's going down, you want to trade GU most likely, if you are looking for buys on EU and GU. Nothing to clean right here on the weekly. This is pretty clean. We have this order block. So next daily candle, next candles, I would expect price to push higher right here, potentially have a new displacement. Then the next target, low target for me would be this fair value gap right here and these equal highs. Again, if we do want to continue higher, I would not want to see a disrespect of this mean threshold. I am going a bit faster, as you notice right now, because I do feel like I've been talking for a long time. 4 hour, if we do want to continue higher, I want to see this breaker hold. So mean threshold of this breaker get respected, this fair value gap hold, and then continue higher off of here. Euro USD. Again, we talked about this in the previous week. We are respecting this daily order block. There's nothing for us to make an argument on bearish prices. That's calling a top. We don't call a top right here. There's nothing for us on the daily for us to say we are going lower right now. There's literally nothing. This monthly, did it sting into that? Who? Oh, not yet. Again, we are creating a monthly order block. We've already created it, this monthly order block. So if we do want to continue higher off of the monthly, we will continue higher off of this order block. Disrespect this breaker. You can see we could see something like this, but that's for weeks to come. Weekly, nothing to clean on the weekly, daily. Pushing higher right here. Again, I think this is the target. EU, bullish for me. This is pretty bullish. 4 hour, nothing to support the idea on the 4 hour currently. So that's a bit of a shame, but it is what it is. So just go off of the daily. Daily, next candles, likely bullish candles. Again, this could support price and push price higher right here. If we do set our invalidation level, again, mean threshold of this order block. All right, GU, weekly, not too clean. We do have this inversion level, this breaker as well, which is currently holding price up, acting as support. This breaker on the weekly. All right, then on the daily, nothing to clean on the daily. This fair value gap. So if we do want to continue higher, we would obviously need to disrespect this fair value gap. So if we get a close above the 50% of this fair value gap, that would be perfect. And that would be a nice confluence. We did sweep these lows. So if we do want to continue higher as well, we want to see a disrespect of this fair value gap on the daily. So a daily close above this fair value gap. And on the 4 hour, we would want to see this fair value gap hold for higher prices. So that's your order flow. And this is, again, market structure. This then becomes your intermediate term low. This is your swing low to the left of it. And then it 100% will create a swing low to the right of it. Of course, if it does go higher, that's why I say 100%. If it does go higher, it will create a swing low to the right of it. It's not 100% that it will happen. You get the point. All right. We are coming into this daily, or sorry, weekly fair value gap. But again, we're not dropping off of this weekly fair value gap. We came into this weekly fair value gap already the previous week. And if it did want to continue lower, then why didn't it continue lower off of this week? So that tells me that it might want to push a little bit higher, but not too certain where it wants to push to. It could push to this order block right here and then drop off. We'll just see. All right. Again, we are looking at a bearish dollar potentially. So if the dollar is bearish, then why are you essentially saying USD CAD could go higher? Well, that means the Canadian dollar is even weaker than the dollar. Yes, it's possible. it's possible that there is a currency even weaker than the dollar. Whoa. Yeah, all right. So this could be the low-hanging target. Again, if we do want to continue higher, we will use this breaker right here as support. So the next few days, Monday could be consolidation. Then we also leave behind a fair value gap that's even more perfect. Then Tuesday could be a sweep into the fair value gap and into the breaker, a previous day low sweep, and then a continuation higher. So that's perfect. So higher prices right here. 4 hour, same thing. A fair value gap right here, overlapping with the breaker, pushing higher. Odd USD, not even going to bother. I'm not going to do an analysis on this one. If we do want to continue higher, and it proceeds to still do it. If we do want to continue higher, we will go lower. If we do want to continue lower, we will go lower off of this fair value gap. So we will see the next week move lower. And we had a sweep here. And again, then that goes on to say we will push lower off of this breaker right here and this fair value gap. So next 4-hour candle could be a move lower. We could see a little sting into this 4-hour fair value gap as long as we don't disrespect this 4-hour breaker. USD JPY. Disrespecting this weekly fair value gap. So I do think we are aiming higher to potentially take out this high. Who knows? If we want to continue higher, we will continue higher off of this order block because that's the near price action. That's the order flow. Order flow is until we sweep this low. We could sweep this low. That's still order flow, but that's very low probability. If it does want to continue higher, we will continue higher off of this order block. So in validation level, 50% of this recent discount array, so this order block, this fair value gap as well. Next daily candle for me would be a bullish daily candle. So the next Monday opening, and again, it is a Monday, so it's a bit shitty because I don't really like trading Mondays. They could also be a consolidation, but next daily candle for me would be a bullish candle. So next week, I would look for bullish price actions right here. Bullish price action. Potentially aiming again for this fair value gap and taking out this high. On the 4-hour, we are creating a fair value gap. So if we do want to continue higher, we could see a sting into this 4-hour fair value gap and then a continuation higher. GBP cut, we came into this breaker. We were expecting these highs to go. We reacted accordingly, etc. So this is the aim for next week, this high. And then what does it create? A new order block right here on the weekly. So if you do want to continue higher, I will expect next week to potentially have a little sting back into this weekly order block, but continuation higher for sure. GBP cut, continuation higher. And that supports the idea right here that we will come into this daily breaker. Maybe if we do get a retracement, obviously. If we do get a retracement, that's a healthy pullback. And we could see a retracement into here and then a continuation higher. That's not calling a top and trying to force a retracement. That's a very different story. If we do get a retracement, we can get into the market potentially when we do get into execution and see that. On the 4-hour, again, order block overlapping with it. 4-hour fair value gap. If it does want to continue higher, we would like to see something like this. Bitcoin, I'll only go over Bitcoin right now, not over Ethereum. We've already done a lot of price action right now and already talked a lot. Monthly, we could close the monthly right here and then have a monthly fair value gap. Then we could see a previous month low sweep into the fair value gap and then a continuation higher. Weekly, nothing to clean. We could see a return into this weekly order block that supports the idea of the monthly, maybe creating in the coming week closing previous month low sweep into the fair value gap and then continuation higher up into this monthly SIBI. Daily would also come into here, maybe this nested order block right here, but that's what I don't like to do. I don't like to look at order blocks right here and then just predict it will go off of this order block right here. No, then I like to look at the daily or the weekly because it's more nearby price action for the weekly. The daily, this is very far back and this is over predicting it. Like, for example, saying this order block should hold and then continue price higher. We don't know. It could sting into this fair value gap on the daily. We don't know. So for now, daily, if it does want to continue lower, it will likely continue lower off of this fair value gap right here. Overlapping with this breaker. And if we do want to continue lower off of the daily, then this mean threshold should not get disrespected of the breaker. So we could see a sting into this fair value gap still and then continuation lower. On the 4 hour, yeah, pretty much the same right here. All right, so that's it right now. Now I'm going to give you the homework. The homework is, and again, there will be a PDF file below this video, so do check that out. The homework is focus on creating a routine and applying it throughout the week, and doing your routine and doing your forecast before I release my own video and before we do the own Zooms. And then afterwards, you can compare your forecast to mine. Don't take my word as a holy grail. You might be way better at executing than me. Or, sorry, not executing. You might be way better at high time frame analysis than me. And that's the point. I'm trying to make you better than me because that's the point right here. You could be way better than me. So if I have a different opinion, then just stick to your opinion, and whatever happens, happens, and we will both learn from it and potentially see each other's side from it, etc. But just stick to your own understanding and stick to your own guts. Stick to your own gut feeling. And that way you will learn. Now, this doesn't go on to say if you did miss something, etc., be stubborn about it, etc. That's not the goal. But do your own forecast. Focus on creating a routine like I did here. The routine was fairly simple. You see how everything here we did essentially do interest rate differentials. It's just the bonds, the dollar, etc. Quarterly shifts, etc. is all involved. We don't need to essentially take a look at it because it's already involved in our analysis. So create a routine, use the routine you are provided with, break it down into very simple steps. So delete a lot of things you don't want to use. Create your routine, create a saying you use. So market structure, order flow, candle science, and then go over it, do the forecast every day before I do my forecast. So on Monday, I will, around 1 p.m. New York Est, I will release a video on Tuesday's forecast and what happened this day. Do your forecast ahead of that time for Tuesday, and then you can compare it with mine and do this every day. And then focus on predicting the next daily and 4-hour candle throughout the week. Of course, this weekly analysis, so this is basically the weekly analysis, but I've also done the Monday analysis, essentially for the daily and 4-hour. Predict the weekly candle, predict the daily candle, predict the 4-hour candle constantly. And the 4-hour candle is fun because you can do it multiple times a day. And pay close attention to how we are disrespecting, how we are respecting levels, and what we can expect next in the next 4-hour and daily candle. So again, I'll send you the PDF file is below this video. You can download it, you can use it, and you can even copy it, whatever you want to do with it. And then I'll see you at the next one. And if you do have questions and you are in the Discord, then just let me know. And I'm very excited to start off with this. This is very exciting, and news-wise, we have a beautiful week ahead of ourselves to do higher time frame analysis. So let's get into it and let's get to work. All right. Thank you, everyone. And please do the homework. And I'll see you at the next one. Thank you.